Hello and welcome. You're watching Money9. I'm Sakshi Batra, and on this show, we discuss all about markets and fundamentals, help you understand what's really moving the markets at record high levels and what is the way forward for the markets going forward from here. Joining in to help us with all of this about markets and much more is a very special guest joining in, Mr. Kranti Batini. I have with me from WealthMills Securities on this edition of Market Meter. Mr. Badini, thank you so much for taking out time for us and good afternoon to you. Yet another record high day for the markets. We are seeing the Sensex and the Nifty climbing to higher levels despite any kind of cues that may be coming, which may have any kind of worry points, but they're climbing all walls of worry to surge ahead. How are you looking at the current setup of the markets and what's next?
Yes, Sakshi, markets are climbing the wall of worries always. It shows the strength, inherent strength in Indian markets and also the liquidity flows that are coming in Indian markets. Right now, the strength for Indian market is coming from the retail investors. The retail flows are so strong that they are not giving any chance to the base to take any kind of control on the market. In
Hmm.
fact, we have been telling are waiting for a dip, but market is not giving any chance for the investors to get buy on dips. Okay, the
Sure.
rally is a vertical rally, but the evidence and the history shows always these kind of vertical rallies never sustains
Hmm.
until unless we have a very strong fundamental uh, uh, data that is backing up. Of course, we do have a strong fundamental data that's backing up, but market is discounting the future earnings. For now, whatever be the earnings season, what we witnessed in IT pack, it is good, and the outlook, the future outlook also very much uh, very
Yeah.
much impact. So what we can going to see is the other sectors how they are going to respond to the earnings season. We need to
Yeah.
wait and watch. But at this moment, always we say caution is important. Of course,
Yeah.
this time also we say it's a common word, but
Right.
extremely important caution. And cash is the king in this market. How you are going to buy any stock is going up in this market. So we can say the cats, dogs, and horses, everyone are running in this market. So what investors need to ensure that, okay, on which beast you are riding, that's very
Yeah.
important. Okay, when it's bull market, when all the stocks are rising up, everybody feel happy, exuberance, euphoria will be there. But once
Absolutely.
the market takes a pause, that's where on which beast you are in, whether it's a valuable beast or a beast to hold or to live in the jungle is important.
That's very important insight and a wonderful anecdote in which you have explained to all our viewers how to really understand the current scenario of the markets. But you touched upon the IT earnings. Of course, we are seeing IT stocks coming back into the flavor after some days of decline after TCS disappointing numbers. But Infosys, Mindtree, Wipro, all of them have posted strong numbers. If I were to understand from you your favorite picks or how you are comfortable on in some of the IT names, which ones would those be? Would they be from the large caps or from the mid caps?
Sakshi, it all depends upon the investor risk appetite and the quantum
Hmm.
of money they are investing in the markets. If the
Hmm.
quantum of money is high and the risk tolerance levels are low for the investors, stick
Yeah.
to the large cap IT companies despite of TCS numbers. Okay, I do agree with you. Okay, the numbers looks not that much encouraging, but the future outlook is looks good for TCS. So
Yes.
investors can buy TCS, and investors have the choice. They can go to the Tech Mahindra or the stocks like Infosys, or we have some kind of the stocks which are in their early teens, like the
Yeah.
happiest mind stocks. And also we have been telling about investors to be wherever the risk appetite is high. The
Yeah.
investors can choose the stocks from mid and small cap IT space.
Yeah, absolutely, sir. So, also wanted to take your view on the entire situation developing in the power space, coal space, as well with the coal shortage and the power crisis emerging. We have seen, because of that, Coal India surging on a one-way trajectory, Tata Power moving up really, really sharply, the exchange stocks like IEX also showing a very sharp return. how should one really understand? Because even now there is uncertainty, there are different points of view coming out as to whether do we have like a clear shortage, because the government has a stance that there is no shortage and no adequate supply will be there, but states have been constantly coming out and there have been instances of blackout. So how should investors really understand this scenario, and if there is any opportunity in terms of stock investments for them?
So actually, we'll divide the situation in two ways. One is the pre-COVID and post-COVID. The
Hmm.
scenario was I was checking the data, and um, we have been quite bullish about IEX, Indian Energy Exchange. The stock was at 150. It was literally sleeping for nearly 7 to 8 months, a couple of years back. Okay, that time nobody were buying that stock when the stock is available at a very it's a value buy available at a very good discount. Today the
Right.
stock is around 700 rupees. So
Yes.
everybody trying to jump and buy the same stock.
Yes.
So this is what the investor, when they want to create wealth, understand the opportunities, envisage the future growth of that particular stock. Even though
Hmm.
those stocks, when you buy, it looks very dull, it's boring, but that is the time they can accumulate where the margin of safety is very high. And
Hmm.
as the time comes, the stock delivers. So
Hmm.
you need to be the early bird sometimes, identify and knock at the right time with a good volume in your portfolio. That is the one of the trait investors need to habituate. So while coming to the power shortage and the coal crisis are concerned, right now if we observe post COVID, there was excess power supply, and the consumption of power was very low because the industrialization, because due to the lockdown, the power consumption was always low pre-COVID
Yeah.
levels. Right now, during the COVID times,
Hmm.
right now, if we observe the coal shortage, we heard nearly 7 8 years back. That is around, if I have to go back, the coal prices were very high in the year 2006, where we were importing the coal from countries like Indonesia and Australia. Back
Hmm.
after, right now today, there is a coal shortage coming back. But
Yeah.
Coal India is India's largest coal supplier in India. So we don't think, okay, we are going to face a dire coal shortage in the days to come. It is more about a consumption and the generation led story, rather than the coal shortage is concerned. But
Right.
we have a couple of interactions with the management of Coal India a couple of quarters back, where
Hmm.
they have the enough supplies, but there was no demand during the first lockdown of the COVID is concerned.
Right.
So right now the Coal India, since the right now we are seeing a complete divergence in the Coal India, in
Hmm.
the thermal power is concerned, because the power consumption and the new environmental norms, people are averting from thermal power. If you observe in the UK and European region, many of the thermal power plants have been getting demolished. Whereas in India, we are back to square one. Of course, we have to depend upon thermal power in India. But for Coal India is concerned, the ESG norms are applicable. So some sort of fund buying is, they are showing some resistance to invest in Coal India. But the stock have a lot of margin of safety. Investors can invest in Coal India also. But
Okay.
I'm sure this is more about, as the economy is coming back onto its feet, and currently we are projected to grow at 9.5. There will be a demand for thermal power, and there will be a demand for power. So the coal shortage is what we are witnessing. But my
Yeah.
sense, and with the numbers, what I'm tracking, we have enough coal reserves in India to face the demand that's coming in the days to come.
Yeah, absolutely. And now I wanted to actually discuss some of the individual stocks, since you have been also recommending that this is a market where one needs to be very cautious and very, very stock selective as well. You have been sharing many stocks on our show which have actually given stupendous returns. And we've spoken about two pockets today, IT and energy space. And in fact, you've given two incredible stock recommendations on our show from both these spaces before. One is KPIT Tech, and the other one is Asian Energy. And both of them have had at least 80 to 90 or even 100% kind of returns after your recommendation. So, congratulations first to you. And I wanted to take your view as to what should investors do who have already bought this after your advice, what should they do with their investments now?
KPIT back 5 months back, we advised to the investors. The stock has given a return of 80% for the investors. They're into mobility technology services. Yesterday, what we witnessed was Tata Motors going up by nearly 20% during the day.
Yeah.
As there is a clarity that's coming with respect to the auto numbers are concerned, KPIT, they provide global solutions for the mobility vehicles are concerned, automobile industry is concerned. So that's why we advised the investors to buy KPIT Technologies at 193. Currently, the stock is at 350, risen nearly 80% from its from the time we advise it to the investors. So I advocate the investors to stay on to the stock, and if any dip that comes into the stocks, they can accumulate. We are quite bullish about the prospects of KPIT Technologies is concerned.
Absolutely understood. And what about Asian Energy, sir?
Asian Energy back we given in the month of Feb, when the crude oil was very low at
Yes.
$50 per barrel. Right now, back the crude is currently trading at nearly $80 per barrel and 5 years high. So as the crude oil prices goes up, there will be a lot of oil exploration activities will take place. So Asian Energy is into the seismic survey for the oil and gas industry. I do get investors since the stock has given nearly 98%, take some profit from the table at this point of time. And any dips, this is a very small cap company, zero debt, and as the crude heading towards north side, so the oil exploration activities is going to go up, and the company margins will go up. So any dip the stocks gives, investors can probably re-enter into this stock.
Okay, understood that. And which one would be your recommendation for the day today?
Sakshi, at this market time, we need to give importance to margin of safety.
Yeah.
So if I have to check the stocks which are at a very margin of safety, safe stocks, we have a stock by name Hemisphere Properties. Earlier, this stock we recommended in the same price range. It went to 200 rupees and came back currently available at 140. What we are
Hmm.
going to witness in this stock is I'm waiting for the AGM and how the government in this stock. The government of India and many of the corporates holds stake in these companies, and it's uh, uh, a land bank story. How the company is going to monetize the land bank in the days to come, how the company is going to develop the land bank in the days to come is crucial for this company. So if I have to sum up and explain to you the valuation story, the stock is
Right.
a undervalued stock at this current juncture. So investors with a horizon of 1 2 years, they can probably buy the stock at 140 at the current range. Definitely the stock is going to give better returns to the investors at this current market juncture.
Okay, I understood that. Well, thank you so much, Mr. Batini, for sharing all these wonderful insights with all our viewers and these recommendations. And season's greetings to you for Navratri and Dashera coming forward. Hope you have a great long weekend ahead. Thank you so much for speaking with us.
Thank you, Sakshi. Season greetings to all our viewers and also you and your team at Money9.
Thank you so much, sir. And with that, let's quickly move on to see how the markets are trading at over half time now. They have been extending the gains that we had seen right in the morning, 61,000, and that level still maintains on the Sensex, 359 points of an addition and 0.6% upside. The Nifty is also, in fact, it crossed over 18,300 markets right now, trading tad bit below that to 127 points of a gain right there. And the Nifty Bank is also 0.5% up right now. It's trading over 38,840, consistently holding up as though at those opening levels. The broader market indices are actually doing well and outperforming the benchmarks with almost a percent uptick for the mid caps and 0.8% of an uptick for the small cap indices as well. Sectorally, when we see a whole lot of action is being seen on the IT space, which is leading from the front, and apart from that, metals and PSU banks are also taking in some reins. Apart from that, the realty space is inched up higher at 1.5%, and slight gains coming in for the FMCG pack. But the auto index has now slipped into the red. Keep an eye out on that 1.4% of a decline there. And media stocks are also showing some kind of a cool off right now. On the gainers and the losers front, for the Nifty today, you'll be able to see that Wipro still tops the chart with 8% kind of an up move. It had crossed over 10% move in intraday session today. Adani Ports, Grasim Tech, Mahindra, and ITC, the other gainers of 3 to 5.5, 6%. Very strong move on these individual stocks right now coming in. On the losing side, you'll be able to see that a whole lot of stocks are actually coming in from Coal India, Aisha Motors, IndusInd Bank, Tata Motors, Bajaj Finance, so some financial names, some bank names, and the other than that, you also have PSU and auto names coming down heavily. 1.5 to 3% of a cut can actually be seen on these particular individual stocks as well. Overall, if you see, the market momentum still holds to be still holds to be strong, and we'll have to see as to how much further do the markets actually move forward from here on. Do we climb up higher, or do we actually see some kind of sell off right ahead of the 3 day long weekend that the markets are going to be seeing right from here? But for that, you need to subscribe to our YouTube channel and also stay with us via our social media handles, and also visit our website money9.com for much more on markets. Thanks for tuning in.